Welcome back to the AI Daily Brief Headlines Edition, all the daily AI news you need in around 5 minutes. Well, friends, never underestimate how much people hate change. After all the controversies surrounding the removal of GPT-4o, it seems like, in general at least, people like GPT-5 better. Now, I hardly need to tell you that when GPT-5 was released, there was a huge outcry over OpenAI deprecating GPT-4o without warning. Reddit in particular had a full-on meltdown and demanded the return of their beloved AI companion. OpenAI, for their part, quickly got the memo and shifted their plans to deprecate old models, returning GPT-4o the following week. With a few weeks of distance from the rollout, one developer tried to figure out if people actually prefer GPT-4o or if they are simply averse to change. An anonymous programmer/AI commenter that we often mention on this show, Flowers or Flowerslop, going by their X handle, took it upon themselves to create a blind testing app that presents two responses to any prompt, one generated by GPT-4o and the other from GPT-5 non-thinking. And that's important, obviously, as the thinking model is more akin from a comparison standpoint to O3. Flowers did note that the system prompt had been fiddled with to force short outputs without formatting. Otherwise, it would be too easy to tell the difference. And the anecdotal results are very clear. Tons of users replied to Flowers, showing their results, with an overwhelming preference for GPT-5. ML engineer Daniel Solorzano writes, "Yeah, it just sounds more like a person and is a little more thoughtful." Now, the website is not set up to aggregate the results from the hundreds of thousands of tests that have been run so far, so all we have to go on is the individuals posting their results. But you certainly get the sense that enfranchised AI users on X at least prefer GPT-5. And maybe that is the better conclusion of this experiment, not that everyone was wrong about their complaints or anything like that, but that the loudness of the complaints about the removal of GPT-4o certainly don't mean that those complaints are universal. Now, that said, there is also growing scuttlebutt on Reddit that the GPT-4o model that came back was not the same as before. Reddit user Suitable Style 7321 wrote, "It's become clear to me that the version of ChatGPT-4o that they've rolled back is not the one we had before. It feels more like GPT-5 with a few slight tweaks. The personality is very different and the way it answers questions now is mechanical, laconic, and decontextualized." So who knows, man? What's for sure is that people form really strong attachments to their models, which is in and of itself an interesting phenomenon to have to deal with. Next up, an update in another big theme of this year, which has been, of course, the AI talent wars. Turns out the grass isn't always greener as a trio of AI researchers depart from Meta's new superintelligence team. Wired reports that two staffers named Avi Verma and Ethan Knight have left after less than a month at Meta and will return to OpenAI. Now, Knight had been poached from xAI, but began his AI career with OpenAI. A third Meta staffer named Rishab Agrawal announced his departure publicly on Monday. In a post on X, he wrote, "This is my last week at Meta. It was a tough decision not to continue with the new superintelligence TBD lab, especially given the talent and compute density. But after 7.5 years across Google Brain, DeepMind, and Meta, I felt the pull to take on a different kind of risk." He commented that the pitch from Mark Zuckerberg and Alexander Wang had been compelling, but he ultimately chose to follow Zuck's advice, quote, "In a world that's changing so fast, the biggest risk you can take is not taking any risk." The post also included a few tidbits on what the team had been working on, with Agrawal writing, "In my short time at Meta, we did push the frontier on post-training for thinking models. Specifically, pushing an 8B dense model to near DeepSeek R1 performance with RL scaling, using synthetic data mid-training to warm start RL, and developing better on-policy distillation methods." A Meta spokesperson reacted to the departures by stating, "During an intense recruiting process, some people will decide to stay in their current job rather than starting a new one. That's normal." And while it would be tempting to write that off as PR spin, I do think that if you're going to be as aggressive as Zuckerberg and Meta were, you have to expect some attrition, because after people's limbic systems have settled down after being pressured to make a decision really fast with a lot of money on the line, they might realize a couple weeks down the line that the decision they made just doesn't feel authentic to themselves. Ultimately, none of this is going to matter except insofar as what the superintelligence team actually builds and puts out, and so that is certainly what I'm going to be waiting to see. Lastly today, we have to talk about the market's response to NVIDIA. If you've been following the show over the last several weeks, you'll know that one of my big current operational theses is that a huge amount of the discourse around AI performance, AI slowdowns, etc., is actually just a byproduct of broader market insecurity. I think that MIT study, for example, hit in a perfect storm moment when markets were getting all nervous about Powell and taking the initial response to GPT-5 as a warning signal that maybe it couldn't be up only forever. Yesterday, we got NVIDIA earnings, and boy, were they ever a Rorschach test on how investors feel about the state of AI. Bloomberg talked about decelerating growth. The Information reported on strong growth projections, and TechCrunch led with record sales as the AI boom continues. Honestly, the only way to make sense of the mixed earnings is to unpack and contextualize the numbers. And to be clear, the headline growth in sales numbers was a banger. NVIDIA reported 56% revenue growth for Q2 compared to the same period last year. And yet, if you read Bloomberg's piece, it's not until the 9th paragraph that they even talk about that. Their focus instead is on what they perceive as decelerating growth and a, quote, tepid revenue forecast. Quarterly revenue was $46.7 billion, which was a new record, but only a 6% increase quarter over quarter. The figures did come in above the median Wall Street forecasts, but are still a slowdown in growth compared to last year. This quarter also saw the widest gap ever between the top and bottom revenue forecasts at around $15 billion, indicating that analysts really didn't have their heads around what to expect. Now again, this is very much NVIDIA being a victim of their own success. Last year's growth was absurd, unprecedented, pick whatever adjective you prefer to use. NVIDIA in 2024 had multiple quarters where revenue was up by more than 200% compared to 2023. Now, obviously, the idea that the largest company on Earth is going to continue to grow revenue at anywhere close to 200% in perpetuity defies all economic logic. The concern is that their revenue is plateauing. By way of comparison, Meta's revenue growth currently fluctuates between 15 and 30%, and you gotta think that Zuckerberg salivates at the idea of consistent 50% revenue growth like Meta saw back in 2015 when they were a $300 billion company rather than a multi-trillion-dollar behemoth. Even though growth is slowing, NVIDIA is the only tech firm above $1 trillion market cap that's still growing at more than 50% a year. Part of the challenge for NVIDIA, though, is that in addition to just these general questions about how much their revenue growth can sustain, they're dealing with the very specific context of the geopolitical quandary vis-a-vis China. While the knock to revenue and growth from the China prohibitions hasn't been as pronounced yet, to many analysts it does create a cap on how big they can continue to grow. The big picture question of where AI capex is going over the longer term remains the core issue for NVIDIA. One stat that was conspicuously absent from Bloomberg's reporting was that Jensen Huang believes we're still in early innings. He told one analyst, 3 to 4 trillion is fairly sensible for the next 5 years. Morgan Stanley's latest capex estimate for this year is $445 billion, growing at 56% and a 12 percentage point bump from their first quarter forecast. Q2 also saw nearly a 25% quarter-on-quarter acceleration in capex from the hyperscalers after zero growth in Q1. Morgan Stanley has total AI capex hitting $3 trillion by 2029, so Huang isn't really too far above some of the Wall Street forecasts. Ultimately, like I said, how one responded to NVIDIA's earnings was basically what part of confirmation that they were looking for in the AI narratives they have in their heads currently. It does seem like there is a slight bias towards the pessimistic view right now as NVIDIA stock fell 5% in after-hours trading. Then again, if you don't think that AI capex is going to run off a cliff over the medium term, NVIDIA still looks like the largest company in the history of the world, growing at 50%. Anyways, friends, that is going to do it for today's AI Daily Brief Headlines edition. Next up, the main episode.